evening and welcome to the Australian Stock Market Show. We do hope you've had a great week and are staying safe. I wanted to start tonight's show with a quote from Dale Carnegie's book. It's a legendary book titled How to Stop Worrying and Start Living. The best possible way to prepare for tomorrow is to concentrate with all your intelligence, all your enthusiasm on doing today's work superbly today. That's the only possible way you can prepare for the future. Basically, what Mr. Carnegie is saying is to stop procrastinating and do what you know you need to do. Tonight, we'll not give you a chance to procrastinate as we plan to take your education to a new level. That said, we can only open the door. You still have to walk through it. As always, our aim is to educate and inform you as we answer your questions and bring you our upfront, no BS approach to all things stock market. Our main topic for tonight is how to avoid a stock market crash. 3 strategies that will save you lots of dollars. Hello, I'm Janine Cox, your host tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening.
Hello.
I decided not to go with the Ocker G'day this week.
Oh, you did. I actually did. I had one of the guests from the US, a lady that I interviewed, I think Thursday, and she come up on the screen and I said, "G'day from Australia." And she laughed.
Lovely.
It's always good when you do that to an American, don't you? Go, "G'day from Australia," and they go, "Oh, g'day."
They've only seen it on an ad.
I love it when Americans try to do an Aussie accent. It's just terrible, isn't it? We can do their accent so much better.
So what do you think of the market at the moment?
Interesting. It's really interesting. It might be finally doing what we're thinking it's supposed to do.
Really?
Yeah, it might be. I'm crossing my fingers and hanging on to my crystal ball just in case, because it just does not seem to do what we want it to do. But with all the stimulus going into the market, it's really upsetting things, isn't it?
Definitely.
And it's giving it a false sort of lift. So it's about being careful right at the moment, isn't it?
And that is wise.
Yeah. Well, anyway, let's move on. Now, Janine, before we get into our next segment, we will take some live calls on tonight's show. So if you want to chat to Janine and I and ask us a question, then this is your opportunity to pick up that phone and call us now. The number you need to call is 03 for Melbourne 9290. 9988. That's 03 9290 9988. Now, I know that I'm super keen to chat with you, so pick up your phone and get dialing now.
So come on, everyone. We would love to speak with you. While we wait for you to call, it is the first Tuesday in the month, and this means we take a look at the sectors in the Australian stock market. Yay! So let's have a look at the charts tonight. Come on. I was getting excited.
Alrighty, on your screen right now is the sectors in the Australian stock market.
This is my favourite part of the week. I've been wanting you to give me a drum roll on this.
If you want to get Janine excited, just bring up a chart anyway. So look,
all right. Okay,
you've got this on the yearly, yeah?
Okay,
Because I'm looking at all the green and I went, hey, that shouldn't be there for this month.
I jumped ahead.
It jumped ahead. Okay, so it's all green. It's the
so
yearly.
financials up around 23.4 or 23.5%. Consumer services a whopping 22%, and consumer discretionary 21.3%. Now, the all ordinaries are sitting at around 13% up at the moment. That could change really quickly, couldn't it?
Yeah, but that's because materials is only up 3.82%.
Well, that's right. So healthcare, and materials is a heavy weight in the market. Healthcare is up 10.8%. So the biggest sectors on our market are obviously the financials, the materials, as you said, and healthcare's really big as well compared to the others. So industrials is following behind that, 9.82, and maintaining that almost, close to the All Ordinaries Index itself, which is good to see. It's good to see when the industrial sector is actually,
I like it when that's
keeping pace. It just gives you a broader overall feel for how the market's performing. Consumer staples up 6.8%, and information technology 4.6%, materials 3.82%. That's really lagging, isn't it? And we've seen the big stocks, the BHP and FMG and Rio all pull back significantly. Energy is actually down 1.53. So
that's
stocks like Woodside, Santos, all of those oil-related stocks, petroleum stocks have all pulled back quite strongly.
Is that a response to pretty much the COVID lockdowns around the world and things not happening and people not needing as much energy? Or
well, that's definitely going to have an influence, and also the fact that there's the big move to renewables as well. is having an influence, but I think the COVID impact is definitely there. And so then we've got utilities at the bottom of the board, minus 6.6%.
That's also surprising.
Well, not really when you look at AGL. I think it's really sad.
It is really sad, but why is it? I mean, utilities tends to be pretty much a consistent performer rather than a spectacular performer. So
not so much recently.
Not so much recently. So that's the results for the year. So are we going to have a look at the month, or what are we looking at?
No, I've actually secretly made sure that I get through this part quickly, even though I really enjoy it, so that we can get onto the topic as quick as possible. So that is all from us on the sectors in the market this evening. So I hope you've enjoyed that brief rundown. Some people are probably saying, great, at least they're not talking too much on that one area.
Well, they might be really interested in the sectors, and that's what I'm saying is why you only just want to talk about the yearly.
Do you want to have an argument about this?
Yeah, probably. Got to have an argument with something anyway, but I mean, obviously, you've called it that's it from the sectors, haven't you?
That's right, yeah. So we could move on. All right. So what are we going to talk about next?
Well, now it's time to get in our first email for the night. So do you want to... I'm going to let you do that first. No. I think I'm going to do the first email. Actually,
excellent.
I was a bit ahead of ourselves. Our first email tonight is from Matthew. He says, hi all, absolutely love your show and I learn more every single time I listen. Can you please tell us your thoughts on Camplify? Would you still buy this stock? Kind regards, Matthew. So let's go and have a look at Camplify. Now, it is on the screen.
Yeah, when I saw Camplify, I said, who?
What the hell?
And it's only a new listing, as you can see. There's not much data there.
Well, I hadn't heard of it.
It's done incredibly well, and I thought maybe he's wanting to beat his chest on this one. Do you think?
I don't know. He's not saying he's buying it, but he may have seen this in some forum or something that's out, and people going, have a look at this. It's gone up so many percent. I mean, when you have a look at it, there's not much. There's no data there, as you can see.
What are we going to talk about?
Yeah, what are you going to talk about?
The fact that it's risen so strongly.
What's it doing? It's
How can you analyse that?
Well, look, it's a one. So, look, this is end of August and it's up 93%. So you can understand why people are talking about it, but when people are talking about it, it's the time we probably shouldn't be talking about it.
Yeah.
You know, the rush is gone, so I'm not sure what we're going to say about this stuff.
Yeah, I was just thinking, someone's caused you to be gobsmacked. Isn't that awesome? You've got nothing to say. That's unusual.
We didn't say much on his email. He doesn't tell us whether he's owning it, he doesn't own it.
Well, look,
what's he
just at the moment, you can see the last few days it's been sideways. It's not growing in price at the moment. I mean, that's interesting. This is the daily chart. So there is a gap down here. It's not necessarily to think that it's going to come back to that level, but the stock could come back anywhere between 230, 220 in the short term before it takes off again. That's the real risk to the downside. And just looking at what it's been doing, it's tracked around 170, 180, and then we've seen it go to 270, 280, and people say things don't repeat in the stock market.
That they do.
You know, come on. Could it go to 370, 380? Well, maybe.
Possibly.
But we've got no history.
No, and I wouldn't be getting into it right now, and if I'm in it, I'd still be hanging on, but I would just have some sort of exit strategy. That's all I would do, Matthew. But right now, I'm not going to tell you to buy it. It's already run its race. Could it go up another 90% in the next 12 months? Yeah, probably. Possibly, maybe, will it? I don't know. Right now, there's not enough data for us to tell all that sort of stuff. But I think we've got a caller on the line, so I need to take our first caller for tonight. And I believe our first caller is Bill. Is that Bill?
Yes.
Bill, you've got a question for us. What's the stock you want us to look at, or what's your question, mate?
Well, the question is a little bit off the mark, but I've got a couple of shares which are $4 or $5, and they've been targeted by probably day traders or other people. I've heard Janine sort of go on with this type of activity, and I just wonder, over the market, is this now becoming more prevalent because of the big money that's around? And do you factor any of this sort of when a share's been pushed down? Do you factor that into your thinking?
We do. Do you have a specific share in mind?
Well, there's WBT, or the other one, the NBX, which is probably, excuse me, both of them, but NBX has got more substance to it, NBX.
Okay, well, Janine's brought up one of them. I'm not sure which one. So because you know what she's like. She likes to look at charts all the time, mate. So
yeah. No, it's great. And I've just and I saw you, used to see you at Foxtel and Janine, and the first in the first 5 of all those old Foxtel things. I don't know why they shut it off, but anyway, it was good. It was a good program at that time.
Fantastic. All right, Bill, we'll answer your questions now. So the question is, obviously, we're seeing a lot of sort of, I suppose, manipulation in the market and investors, more retail investors, attacking stocks nowadays.
Yeah.
And I think you've got to say the answer is yes, mainly because of COVID. I think when things get back to normal and people aren't at home as much and they won't have as much time when they're working, we won't see that as much.
Yes.
Because the market tends to sort people out all the time if they don't have knowledge. But
I think the reality of the situation, Bill, and g'day, Bill, is that you have to be aware that when you're trading a stock like this, and just looking at the chart that we showed recently, is that it's quite volatile. Can we bring that up on the,
we can bring
screen
the stock
to show?
That's why I asked him for a stock.
Yeah, so if you look at the chart of, now this is Weebit. I didn't bring up the other one because I tried to search for it and it didn't come up for me, sorry. So I've got WBT there up on the screen, but you can see the volatility of this type of share. So you're going to be open to this sort of volatility. It's got its upside. So on the plus side, it could mean that you get really strong upswings, but there's always a downside to that, and that is that they're going to fall. What do we say? We go up in stairs and down in elevators, but in little stocks you can go up in elevators and back down in the elevator quite easily.
Yeah, you can tell. I mean, the volume's sort of, 2 to 4 million, that sort of stuff on a weekly basis. So it's not, I wouldn't say it's a huge liquid stock, but it's not too bad.
Yeah, look, the fact that it gapped up so strongly, and this is what the chart's showing at the moment, and traded up so strongly, it was probably going to come back anyway to fill that. So he might have been looking at the price going up up around 440 and then seeing it come all the way back down here. To me, that's just the way this stock moves. Look at the history of it, and we can see the range of volatility that is on it any 1 week, 26.4%.
Yeah, to answer the other part of Bill's question, we do sort of take it into context, Bill, when we start seeing this sort of stuff, because obviously it shows up on the chart. So we look at it in terms of volatility and a few other things, but do we have a huge weighting on that on our thinking? No, we don't. We still rely on all our tried and true stuff that we actually look at. So we need to go into our next email, and I think it's from Deborah, I think. Now, next email from Deborah says, "Hi Dale and Janine, I started investing in shares for the first time early this year, and since then I bought both Dale's books and I've learnt a great deal from them. Good job, Dale," she says. "I would be interested to hear your thoughts on Dusk or DSK shares. I bought into Dusk in April at $2.98 and watched them rise to $4 in July. However, I probably made a rookie error and didn't set up a trailing stop loss or sell soon after it started to trend down." She said, "I didn't have Dale's book at the time, so I ended up selling at break even at $2.98 about 3 weeks ago. I'm considering buying back in as I think they have quite good fundamentals and had a very good sales growth past year. Too risky, do you think, Deborah?"
Look, I actually think she made a good decision.
To enter or exit?
No, her exit, I mean, her entry was reasonable because the stock's trending up nicely, so there's momentum behind it.
Yep.
And the fact that she actually did exit, I say, take my hat off to you. Well done in actually making the decision to actually go ahead with it and not just sitting there on it. But, I mean, she could have got out a little bit earlier, no doubt, with the trend line or something like that, now that she knows the book. But the fact that she's got the feeling for being able to go into a stock and then exit, and she's able to do that, I think that's fantastic.
I think that's amazing that she's exited with somebody that's, I suppose, I'm guessing new to trading, and obviously hadn't fully read the book, and that she was willing to take an exit, because so many people aren't, are they? They really aren't willing to take an exit. So congratulations.
Look, and in terms of what could happen next, well, we really need to see this share get back above that high there in August 2021 to know that it's more likely to go up than down, and that's the risk with it right now.
Well, it's not a buy right now, is it? And there's nothing setting up for a buy right now. So that's all I'd say, Deborah, is to make sure you understand what your buy and sell rules are. I mean, obviously you did sell for whatever reason you sold and you broke even on that. So that's great. So consider that a good trade. But now you've read my book and you understand the importance of having a strategy and a plan and actually having some rules around what you're actually doing. So I just set those. But right now the stock does look like it's going down a bit, isn't it?
Okay, we have another caller on the line.
Oh, fantastic.
We've got a really interesting person. I'm looking forward to speaking to Alex we have on the line. Hello, Alex. Welcome to the show.
Hey, Dale and Janine, thanks for having me on.
Yeah, look, Alex, where are you from?
I'm in Sydney, so I've got a group of young mates that have been following you guys for a year now or getting around your book, so we've been loving it.
Fantastic. Well, look, and the stock that you've got for us today, would you mind sharing that with us?
Yeah, I'd love to hear your thoughts on S32. It's obviously rallied quite hard in the last couple of weeks, but I bought back in November at around $2.25.
Okay, fantastic.
Very good place to enter.
All right, well, look, we'll just bring up that for you then.
Oh, sorry, I should have been doing my job.
I'm thinking, why are you nodding your head?
I was just excited about Alex having S32, and I went, yeah, go man, it was going good. I mean, I went up 4% last week.
You got carried away then, didn't you?
Sorry.
Okay, Alex, you can see that we've got on the screen S32, and it's looking really nice. We actually think this stock looks fantastic, and the potential upside for this share at the moment is around $4, maybe even $4.30, $4.40 towards that all-time high. And if it goes up there, there's a potential for it to even break through that all-time high. So at the moment, it's early days yet. So in all likelihood, shares when they actually break out like that so strongly, you can see on the right-hand side, will often have a retest of that. So it may come back temporarily before it then moves up again.
Yeah, because you've got to think of, obviously, the momentum it's had at the moment is really sort of that angle. And so it's really
But it can change. Like we know from pattern analysis that a stock will start off on a certain angle, and you've shown this plenty of times on charts before, and then all of a sudden it takes off on a different angle and sets a new trend.
I mean, he bought in November, so he bought in somewhere around about sort of here, somewhere in November. I'm not sure, it may have been on the breakout of that. So great place to enter, mate. I think he did really, really well to enter in that. So well done, Alex, wasn't it, Alex?
Yes.
Yeah, good. I've got a good memory. I'm not getting that old. Now, moving on, we do have a question from Jim who says, hi, Dale and Janine. What do you think of Ramsay Healthcare now? It seems to have started breaking out of a sideways move. Thanks, Jim.
Very good question. Good stock choice. Healthcare is always a good place to be. This is where a lot of the growth comes from in our market. Like we've got financials, obviously, is the major sector on the market, but then we've got the materials, healthcare behind that. CSL's a big one. I guess Sonic Healthcare is doing best, and CSL have done better than Ramsay, but Ramsay could follow. So we're just watching to see what Ramsay does. It looks very interesting right now. The fact that it's broken out recently above these highs here, it's just retesting. We've seen it go ex-dividend, so stocks will often pull back after going ex-dividend, and then we need to just see whether that rise is going to continue, and if it does, we're more likely to see it take out this high in February 2020. So that's really interesting to watch it, but obviously any stock you have, it doesn't matter whether it's a long-term buy and hold or what your purpose was for being interested in this share, should be protected with a stop loss.
Well, it hasn't done much for the last 5 years, so really, it's not that exciting in terms of that, is it? If you buy and hold, and this is where...
Yeah, if you buy and hold, they would have got nothing but the dividend, so it's really about timing the entry, because it is, people expect that stocks will just do what they've done in the past always.
Yeah, they do, don't they?
Now, we say that the past tells you about the future for the shares, but because patterns vary, or the way that stocks unfold in a pattern, we're going to be talking a little bit about that tonight in the topic, but it can change. The angle of the trend, it can change the trajectory, all of that. So, but I think at the moment this is an early stage in the move up.
Okay. Well, we've got another caller on the line. So we've got the caller. I think it's Steph. Are you there, Steph?
Yes, Dale, Janine, how are you?
Welcome to the show,
you.
Steph. Where are you from, Steph?
I'm from Sydney, Australia.
Ah, fantastic, beautiful part of the country, almost as good as Melbourne where we are. You have a question for us?
I do. It's two questions.
Yep.
One is more so focused on the gold market. So I know that it was probably January this year, it peaked at 1,900 in terms of the US gold price. It's now dipped below 1,800. Wanted to understand your view in terms of investing in the gold market. And then the second question is connected into that, is looking at the Chalice mining stock. So CHN is the ticker code. I think there's a bit of an upswing because it did hit $9.17 probably a month or two ago, down back to $7.30, I think. It looks like it's trending up, but wanted your thoughts on those two questions.
So when you're mentioning you want to enter in the gold, are you talking about physical gold or gold futures, or what are you looking at?
Just gold stocks,
Gold
really.
stocks,
I was looking at ETFs, but then maybe just separate gold commodities.
Cool.
Yeah.
Well, I'll let Janine answer your question on the stock you've mentioned. I think it's CHN.
Well, look, very interesting share. I'm just going to bring that up on the chart for you, Steph. You can see that it's really been quite bullish. Look how it's trended up beautifully over time. At the moment, it's actually testing this low here. So we really need to see the stock get above this high, ideally in August 2021, 792. If it does that, then it could be a really nice move up on the share going forward. It may actually be above a trend line, depending on what your rules are for buying the share. Could be a good opportunity, but just remember to have a stop loss underneath it. Now, you know, you might decide to set it really tight. Some people set a percentage stop loss. If it goes below the low of this week's bar, then I'd be quite concerned about its direction, and it may then head south. So quite a good stock pick, I think. But in the early days, it can be quite volatile, Dale. Just looking at the liquidity of it, we're seeing, what is it, about 9... what's that figure? Can you read that out? I can't see across.
I've got to put my glasses on again, girl. What are you doing to me? 9.4 million.
Right.
Basically 9.5 million.
Okay, and so then, you know, we're looking at that. It's a reasonable size stock now, given the liquidity's changed on it since COVID. It's just dramatically changed the share. So going forward,
Gold.
this could be interesting.
When's the last time you spoke to Joshua?
Look, Joshua's been avoiding me, I think, lately.
I think we're booking him in shortly, actually.
We have, I think we have.
Did you get the boxing gloves out on him too?
No, I didn't.
Okay.
Maybe he's scared of me, I don't know. Well, look, I just want to talk about the gold stocks, okay? Because, you know, thinking about the gold price and where it's going, at the moment, the gold stocks are going down. So there's a lot of downward pressure, and the risk is to the downside. We're not sure at this point, given the way, and I've got Evolution Mining, just as an example, up on the screen there. There's a real risk that these gold stocks, Newcrest Mining, top 20 share, Evolution Mining, Northern Star, you know, some of the big ones there could continue to fall and trend away. So, you know, it's not about thinking, I want to try to get in early on these ones. It's more about being, you know, patient and just waiting for the right opportunity, and it's not yet.
Thanks, Steph.
All right. Our next email is from Chris. Hi, guys. I'm watching NCM, speaking of gold, and believe there's a long-term upward trend dating back to September 2018 that prices just touched, and a short-term downward trend line it's been following since July this year. If price rises over the next week or two, would you consider this a buy signal? Thanks in advance. Chris, great question. I love the way that people are structuring their questions, and now you can't see what you're doing.
Janine, I don't know where you are. There we go.
Okay, you can see Newcrest there on the screen. Left-hand side is the monthly chart, of course, and it just looks ugly. Sorry, I'm just going to say, but all of the gold stocks are doing similar things as we showed.
It's like it's in a long-term downtrend to me.
It does, doesn't it? Okay, so right now he was talking about trends. Okay, so first of all, I'm going to open up this and look at the trend. Beautiful trend up. So when the stock gets going, it really does move fast. You can see there. But when it's going down, the risk is right now it could take out this low of March 2020 and keep going. It looks like it's going to take out this low at the moment, March 2021. And if it does, that increases the probability of this one being taken out. I would say regardless of whether you've got a, you would want to have a trend line on this, a confirmed trend line, and you really need to understand how to draw these properly with these types of shares, because you can get tricked into false rallies really quick just because of how fast they come down.
I agree. I agree.
All
Well, we do have another call on the line,
Yes,
Janine.
we do.
We've got a lot there today, and I think we've got Jack on the line. And Jack, are you there?
Hi, yes, Dale. How you going? And Janine?
Oh, you're a good-looking dude, aren't you?
Hi, Jack.
Where are you
How are
from,
we?
Jack?
I'm from Western Australia, south of Perth.
Oh, thanks for getting up early to watch Janine and I. Fantastic. You've got a question for us?
No worries at all. Yeah, I do, guys. Got a question on the stock code is AHI, and it's called Advanced Human Imagery.
Yep.
From what I can see, the stock looks to have broken a medium-term downtrend.
Yep.
And I was just wondering, they've recently secured a position on the NASDAQ market, and I'm just wanting to know, once it's obviously all gone through and it's available to the American public, what does that do? Will that possibly push the share price up or not? I'm not really sure what will happen after that.
Yeah, that's very interesting when they dual list, and Janine's champing at the bit to answer you, Jack. I can guarantee it. So let's have a look at AHI.
I'm just about to crack up laughing here. Sorry, Jack.
Not about Jack. No, you're not laughing at Jack.
I was laughing at your joke you said about him getting up early. You didn't know how to take that, and I'm thinking that was like one of my jokes, as bad as mine, wasn't it?
They're not as bad as your jokes.
Yeah. AHI, okay, looking at the chart here, you can see this unfolding here is just really, it's not bullish at all. So I guess I'd be a little bit concerned about that. I mean, I think in the first instance, people think automatically that when a stock lists on an overseas exchange that it's going to do well. And it doesn't always happen that way. So that's first thing to be mindful of. Always look for direction. So if this share goes through that high there is a potential for it to keep going, but it must take out that high first before I would even entertain looking at it.
Yeah, a lot of the reasons they'd be listing on the NASDAQ would be to access more capital, wouldn't it?
Yeah.
And that's pretty much the main reason for all that. And it can also make it a little bit more difficult with the stock and trading the stock. And there's been a few examples over many, many years now. I know BHP is coming back off the London Stock Exchange because it is dual listed on that one.
Yes, exactly.
But all right, so now,
Right.
so is that all you want to say for this stock?
I think it's an interesting share, very volatile. You need a really good stop loss. But just, and in saying that, you might find that just quickly looking at this here, that's 22%
That's
to
huge.
that last red bar. So look, I mean, where are you going to set your stop loss?
Yeah.
At least it's not going to move far on the chart. You'll find out really quickly if it's going the right direction. Anyway.
Okay, now it's time, before we get into the topic, which we're just about up to, later on in the show, we will have another opportunity for you to call into the show to ask Janine and I a question live on the show. So stay tuned for this opportunity, and more importantly, be ready to dial when we tell you to. Call. Okay, now it's time to get into tonight's topic, which is how to avoid a stock market crash. 3 strategies that will save you lots of dollars.
The key to avoiding a stock market crash is to think defensively rather than offensively. And you may have heard the phrase, the best defence is a good offence. Why is this important? Well, from time to time, the market will crash, and many of you will recall how the market fell during the GFC. And whether or not you were on that roller coaster ride, I'm sure that you don't want to be there to experience a repeat of that in the future when a correction occurs. So what we're about to share with you is critical to not only building your wealth, but also keeping it.
Okay, we'll share with you our view on why you need to know how the market unfolds and why it's important for you to prepare your best defence. We'll also share with you the warning signs so that you know what to look for and how you can prepare your best defence against a market crash. Lastly, we also share our thoughts on whether the market is about to crash. So it's going to be a big night for you.
Let's get into it, shall we? And many in the financial industry claim that your best defence against a stock market correction is asset allocation. But are you coughing there?
No.
But is it really? What people assume is defensive isn't always the case. We only have to look back at history and what markets demonstrated to see why it's important to not be passive and to take an active and defensive approach. The best example of this was in the GFC when your money wasn't safe regardless of the asset allocation. The best defence was using a solid exit strategy and exiting when the market indicated it was time to get out, well ahead of the biggest fall. And there are things you can do to keep your eye on the market and what's going on.
Okay, now one metric that we should keep an eye on is the market average PE ratio, or price earnings ratio. So let's discuss this first. Now, the PE provides an indication when a market may be trading in a zone for a reversal. However, this doesn't always indicate a crash might occur, as in some cases it may take time for earnings to catch up to how the market is priced. Now, in August 2020, the average PE was around 17, but rose in the last quarter to above 20, which can be an indicator that the market is going to turn. Now, the PE continued to rise to around 21 this year. So let's discuss that first.
Yes, that's a great point to start with. So you can usually find this information on your broker's website. Historically, the market average PE ratio will peak somewhere above 20 and sometime later the market pulls back. Hence why there's a talk of a market crash right now. But this is not a precise indicator, as Dale said, of when a correction is likely to occur. So what else do we know?
Well, when looking for signs of a market crash, we really do need to understand how the market is unlikely to fold into the future. And I've taken a few charts from my book, Accelerate Your Wealth, so that people know what to look out for to protect their portfolio from a crash. Now, on the screen...
Now, we're going to have a bit of a look, aren't we, at what it looks like when a market actually corrects.
Yes.
And now, what we can
Did
see
you want to
there...
explain it? It's in my book. I explained it in that, but
Well,
you can do it
would
this
you like to
time.
do that?
No, you can do it.
Okay, so what we're seeing on the left-hand side is this line that is vertical, and that's the price line, okay? And the bottom line is time. So just like we show you on the charts each time we bring up a stock chart, we have that graph. But it's all about the pattern or the phase of a market and how it unfolds. So at the start, there's this phase one, renewed confidence. And then the market builds, it starts to get some steam behind it. But it's not really until the market has that first pullback and then takes off that you really know the market's going to rise. And that's the challenge,
safest place
isn't it?
to buy.
Yeah, that is the safest point. So then you get improved earnings coming through after that, and then it corrects again. So, you know, the market extends, you get the second pullback, it takes off again, but this time it becomes rampant speculation. Everybody's getting into the market.
This is where the most people buy.
This is where all the money piles in, and you'll see this in a graph that I'm going to show you shortly. But after that, we start to see stocks being sold off, and it won't happen all at once. So you'll see stocks in different sectors coming off at different times. And eventually the market will roll over when the biggest stocks start pulling back. And then you'll get a kick back up. Now, this is where everybody thinks that the market's going up again, don't they?
Well, this is where all the people that didn't buy on this side start to buy again, but they don't have a lot of money, so they run out of money pretty quickly. And then the sellers, all the sellers have done through here is stop selling to let prices ease back up again, only for it to fall away again.
Yeah.
So, and we get that a couple of times. They push it down and then the sellers pull back a little bit and then they push it down again. And we've got to remember the biggest trading is by the institutions. Okay, so where are we going to now?
So where's the biggest part of the correction happen, or the biggest lot of selling that happens?
Down here, right at the bottom. The
Or
biggest
just
lot of
above
buying
that.
is right here and the biggest lot of selling is right down here.
Yeah, well, often it can be just on that last little leg when it just proves that it's still going down and everybody thinks, oh, I can't say that word.
You nearly did.
And then they think, I've got to get out. So that's what happened in the GFC. So that's the first one that we want to show everybody.
Okay.
Okay, the next image that we want to show on the screen is this one, which is actually it's a phase one, and it shows all the phases, okay? So it shows what was happening during the GFC.
So this is the GFC through down here.
Yeah, so you've actually got this big pullback you can see, which is the GFC fall. So this is the All Ordinaries Index when the market pulled back. So you can see what a lot of people don't realise is the market actually wiped out all of its gain.
It did. So that's the bull market started here and it wiped it out nearly.
Yeah, and this is why when we're sitting there looking at returns on portfolios, you can't look at the return. You've got to look at the strategy, because what's the strategy in place that's going to stop that from happening in the future? So phase 3, rampant speculation. Phase 1, abandonment of hope, coming down all the way. Phase 3, 2, decreased earnings, and then phase 3 of the decline is distressed selling. And then you get the cycle repeating all over again as it goes up.
Confidence through there, yeah.
Yep. Now we've got another chart that shows the breakdown from the 2009 low. So
these charts are in my book, Accelerate Your Wealth.
They're all in the book.
So buy my book if you want to see them again.
So we're just going to have a look at the next chart, which is actually a breakdown of all that. So we can see all of these phases broken down.
From the GFC?
Yep. So this is why, so it wasn't until after the market pulled back in 2009, you see this really strong rise come up, and the box, you see that pink box around it?
Yep.
It's not until that actually happens that you know that the stock market is going up. And people will say to us, oh, why aren't you buying boots and all? Well, we haven't even confirmed that the low's in yet. It could just turn down again. So, and we don't mind giving away a bit off the bottom, because it's the long-term process overall that's important in being able to maintain or hold on to what you've got. So, and then the market went through this big rise we saw, and the tsunami hit down into point B, you see on the bottom of the chart.
Into 2011.
Into 2011, and then the market went sideways, that secondary reaction. Now, this is where you get to know what happens. After a low, there'll always be these secondary reactions. Sometimes it's more violent than others, and into that pullback where it says secondary reaction at point C, that shows you it's testing itself. So at that point, we thought the market could keep falling. It was a real possibility, but it wasn't until it started to push up again and went through that point C that we had confirmation that it was going to continue to rise. That's, again, the safest point. So you've got to go through that process of determining when it's actually safe to buy. This is what people need to understand, how the market unfolds when they're putting their money.
This is the crystal ball. And people joke that I have a crystal ball, but this is the crystal ball because we have the roadmap of how it usually unfolds, not always.
Now,
so we
one
got
more
slide?
quickly, we've got a final one.
I know you always
here.
have one more, don't you?
One more. All right, so you can see there on the screen, this one here is actually showing all of those primary and secondary reactions. This is again in the book. And you can see the secondary reaction we were looking for when COVID hit didn't happen.
Didn't happen.
It literally went down in 3 weeks like a lead sinker. The market corrected 40%, hadn't done it in 100 years. Is it likely to do it again like that? I don't think it's likely to do it like that again. I think, that the markets sometimes have strange fluctuations that occur, but it's an anomaly rather than a normal. Okay, so we're expecting that sort of reaction is what we'd be looking for when the market goes into a full-on correction in the future.
Yep, correct. Okay, so now we've finished with the charts?
Yep, we have. Now let's move on to the next part. Ahead of a peak, we see record levels of borrowing to buy stocks. Margin lending levels rise with the market. So let's take a look at the charts and get an understanding of what actually occurs. We'll also show how a trend line can assist you to preserve capital. And we intend to discuss what to look for when a market actually recovers so that you can profit from the rise that follows. All right, sounds like a lot, and it probably is, and we've condensed it down into this short amount of time.
Yeah, you're just scratching the
I
surface.
love to talk more. Margin lending. Okay, this is actually, this blue one here now, it's showing that blue line, you can see that comes all the way up here. So I should start left to right rather than going in reverse. All the way up to the all-time high of the market. You can see that this graph shows where the peak was.
That's a 2007 peak, yeah?
So, but look where the peak was in the margin lending.
It's past it.
December 2007. So people were still going as the market was pulling back.
And they were still going on margin.
And sectors had pulled back. So the margin lending actually went higher, right? So I'll take that off. And then it actually fell really dramatically over time and hasn't recovered anywhere near those sort of levels before. So we're not at one of those massive corrections right now. We could be seeing a short-term pullback in the market, but we don't believe it's one of the big ones. And that's one of the indicators for us. So, but also look at the number of accounts. They just kept trending down. Now, I don't know whether that's because people are still fearful of what the scars that happened in the... Because people lost their houses, lost everything. Because they just.
So this is broking accounts. Now, I know there was a lot of record levels of broking accounts.
This is margin lending accounts.
That's margin lending accounts, sorry.
Okay, so they kept falling, but I don't know whether that's because they changed the rules, because they make you pay a certain percentage of interest, even if you only have a small amount.
It's all changed since 2007.
Invested now. So, you've really got to look into how that works. Now, these are actually average calls. So these are the margin calls where people got called out. Yeah, spike volume. This is where this is really sad, where a lot of tragic things happened around that time.
Your portfolio must have fallen by at least 30% before they even do a margin call. So so that's months. That's a fair way into the fall, isn't it?
Yep, and the market actually peaked. That's showing December, but it actually peaked in November. So. The black one is the securities, shows December, but I think it's just hidden behind that. It was actually November. And you can see the value of securities that have actually gone up, that are under margin, or that were under margin, but now not. So this is the securities.
So how up to date is this data?
In the stock market. This is actually up to, I think it was September. No,
July this year?
Yeah, to the quarter, June.
Okay.
Sorry.
Cool.
So that's to the quarter. So that's what's happening at the moment. So we're definitely not in that danger zone, I don't think, for a big correction like the GFC.
Yeah, I don't think we are, because we're not seeing the margin lending. And if you saw a lot of lending, then it's going to be there.
Yeah. If they start to change the laws around lending, that's when things will just go crazy. Yep.
Okay, well, it's easier to understand what is going on when you know how to read the charts. But even if what you could expect unfold doesn't occur in exactly the way the analysis indicated was likely initially. Now, we do have to have rules to manage risk to allow us to keep our capital safe. So our strategies, or our top 3 tips for you to prepare for a stock market crash are: the first one, observe the PE ratios and the margin lending levels along with other economic indicators. So those are 2 critical things you need to look at. The next one is understand how the market unfolds and how to read the charts. The charts will tell you, they're the roadmap to the future. They will ring the bell for you, we know that. Now, we also learn how to use some solid rules such as trend lines to manage the risk for each investment. Now, whilst the market is in a corrective phase, this is a perfect time to review your plan and your rules as you prepare to re-enter when safe to do so, as Janine was mentioning earlier.
Now, you actually skipped ahead a little bit.
I did, didn't I?
Can I have another minute? I'm just asking them nicely of our production team.
I skipped ahead to get it, or you? I skipped ahead, or you forgot something?
No, you skipped ahead, and I guess I didn't speak up.
Just squeeze it in there, okay?
Shall I kick you next time under the table?
Squeeze it in there, and then you can tell me when I can keep moving.
Okay, so I guess
Yeah.
I need your assistance here, because
Okay.
what we're going to do is discuss how somebody could have protected their money from this correction in the GFC.
Easily, I tell them in my book.
Yep. So we just bring up a trend line and just show them
Follow the rules in my book, and you'll never get caught in a crash.
what difference it would make for people and why we thought that the market was more likely to fall at that time.
Oh,
So I'm really putting you under the pump here, aren't
you're
I?
putting me under the pump. So, geez, you said you had something to show people, not me.
Yeah, that's funny, isn't it?
How does that work? It's
I love this.
Yeah.
All right, I'm loving every minute of
Just
this.
breaking a trend line on the monthly chart. If you just used an exit as one close below a trend line on the monthly chart, which I do talk about in my books, you would have exited the market right here.
Yep, and this is where we actually were out, and people were ringing us to say, "Can you put our money back in the market?" And we're saying no.
We were 100% in cash, and everybody's wanting to go back in.
Yep. Now, we're not always right. We're not going to sit here and say that. Sometimes we get it wrong. However, the strategy overall, over time, actually does work to keep people's money safe. And that's the important point, because as you saw from that big rise on the chart, you can make all those gains and then it can get wiped away with a lack of, protection or an active strategy.
Yeah, well, I mean, just looking at this, so that was 17% from the top. If we exited all there, we're already exiting all the way through
Some
here.
stocks.
But even if we just exited every portfolio there, we're 46% off the bottom.
Yeah.
So that's the smart sort of stuff. So
All
is
right.
that all you need to show?
Yeah.
Okay.
Okay.
All right, so that's all from us for now on how to avoid a stock market crash. Now, before we get into our next email, I hope you've been patiently waiting with your phone ready and ready to phone in for the opportunity to call and chat to the show, or chat to Janine and I on the show, if I can get that right. Now's the time to get dialing. The number you need to call is 039290 9988. While you call us, we'll get into answering the next email. So call now on 9290 9988. Okay, the next email is from Dina, who says, "Hi, Janine and Dale. What are your thoughts on the agreement to merger with Santos and Oil Search? Do you see this as a good thing? Can you also explain this statement taken from the Santos website and how it works?" And it goes, "Santos expects the merger to unlock pre-tax synergies of US 90 to 115 million per annum, excluding integration and other one-off costs, which is expected to benefit both sets of shareholders." I don't own either stock or either of these stocks, and I'm just interested in your explanation. Cheers, Dino.
All right. First of all, I want to say that, we think it's a great thing that Santos and Oil Search are merging. Two great companies. At least they're not being taken over by overseas interests. You will have heard me go on about that before. So, I mean, we're all for that. The next thing is the benefits of companies merging.
It's huge.
It's huge, isn't it, from a dollar point of view? Think of all of the, the duplication that would go on across different companies.
Especially if they're in very, very similar fields. There's a lot of duplication. Yeah, there'd be a lot of economies of scale right across the board. But it also makes them bigger, so they're less likely to be a big takeover target.
Yeah, and I'm not really sure how the tax side of it works. I haven't read up on the detail of how that works, but I just understand it in a broad brush sense that combining the two companies will actually provide those benefits. So I think it's something that you would do your research. If you want to inquire through the Investor Centre, I'm sure they're there to answer your questions. And sometimes those documents, that they produce,
so confusing.
And they can be so thick as well in terms of, the time to spend going through those. But, if you're a shareholder, you really do need to read it and understand what's actually happening.
If you're not a shareholder, you maybe not want to read it because it might be good bedtime reading for you, so I don't really know. But right now, we do like it at the moment. So Santos, do you think it's going to be a bit of a plotter for a while, or is it going to be okay when the merger goes through?
Look, I mean, it's all a question mark, isn't it, when mergers go through? The market's going to revalue the stock, and we've got to wait to see what the combined chart looks like as well. So, look, I really reserve my judgment, but we probably will be discussing this at some point when we do the energy sector again at some stage.
I'd say we will be, but we do like it, and it's something that is good for Australia. Right now, I'd be sitting back and waiting. That's pretty much what I'd be doing.
All right, now we have a question from Adrian. G'day, Dale and Janine and team. All ALL, what's your opinion on entering at $48 now as long-term hold, 12 to 18 months at least? I don't currently own it, but it's been on my watch list since June. However, I feel like an entry opportunity appeared a few months ago, April to June, between 35 and 43, which I've missed. I've attached an attempt at a trend line which suggests it's still got legs, assuming the trend line is correct. Don't shoot me, Dale. Cheers for all the information you share via YouTube, podcast, etc. Adrian, thank you very much.
Don't shoot him.
That's so funny.
No, I actually didn't mind the trend line, but it doesn't indicate what you're saying it does, Adrian. So when I did look at the trend line, I went, okay, that's not a bad little effort, so I'm not shooting you.
Okay, but there is an uptrend there.
Correct.
And there is a trend line that you could draw up there underneath that rise.
But he drew a different implication to what a trend line is. The trend line is just a momentum indicator. It doesn't indicate anything to how strong it's going to be, how strong the trend's going to be. It's just showing you what the trend angle is, basically, or how fast the trend is unfolding. So you can't do that. So he said he missed a buy between about that $35 and $38, was it?
I'd have to agree, but it's probably more likely the $35 mark where the original buy was missed, and then it's just gone away. So look, if you don't own the stock right now, if people are looking at this, then it probably is not the best time to be looking at it, given it's so extended right now. So, I mean, I wouldn't be buying it now.
No, I wouldn't be buying it now anyway. So just sit back and patient, Dino. We're going to take another caller now, Janine. So we do have a caller on the line. It's Cam. And Cam, are you there?
Yes. Good evening, Dave and Janice.
Fantastic. Where are you from, mate?
From Sydney.
Oh, fantastic. We had a lot of Sydney people today. Fantastic. So do you have a question for us?
Yeah, interesting to looking to buy the share, Sydney Airport share. Today the share closed at $8.23, and I read the news that one of the company overseas they offer $8.75.
Yep.
And another question is the Star share SGR is good time to buy as well or no?
Okay, we're only going to do one stock, matey. We're not two. We haven't got time for two, but we're going to look at Sydney Airport.
Sure.
So you're looking to buy Sydney Airport because another company's come in looking to buy it. That's what you're saying?
Yep.
Okay. So Janine, what are you thinking?
Look, I mean, if I didn't own the stock right now, I definitely wouldn't be buying it. If somebody's come in with an offer $8.75, the market's trying to factor in what it's actually worth there. So look, I mean, there's two sides to this story. One is, when there's a takeover announced, is there a value opportunity for investors to put their money in it once the share's already jumped up? And I would say generally no. If there wasn't another company that came out that were interested in buying it, then maybe, because it could rise further, but how much more is it likely to go? That's the question.
Well, $8.75 is around about 6% from its current closing price, so why would you bother?
Why would you bother doing that? I mean, then... Look, the other side of it...
There'd be a larger bid.
Yeah, well, why did it fall is the first question. Why wouldn't it have gone right to that $8.75? That would be my thought.
Yeah, why did it fall away?
I think that the board were going to accept the offer from what I can gather, but I'm really disappointed that that's the case if they are going to, because I think about it from this perspective, right? Pre-COVID, what was it worth? Because in 3 to 5 years' time, when the virus is not a virus, it's like a flu, how is this going to reflect on airports and air travel and etc. And I think you would have to assume that in 5 years' time things would be back to some sort of normal.
Yeah, I
right.
agree
So it's not and when companies invest in these type of stocks, it's a long term.
It's a long term. It's a
so
good,
for them,
infrastructure
it's a bloody bargain to be trying to buy a stock below the high that it was trading at prior to the correction, knowing that in 5 years' time there could be a completely different story. And to me, it's really sad if stocks like this get taken off our stock market.
Okay, so if you want to ring and talk to Janine and myself, just like Tam did, ring 9290 9988. Whereas our next question next email question is from, I'm going to try and say this correctly, I'm sorry, guys. Megnath, I think his name is Spanish. His name is. So he says, hello, Dale and Janine. I'd like to thank you and your team for everything you do for us. I just started reading your first book and loving it already. I've been watching Eagers Automotive, or APE is the stock code, from September 2020. And that period, it just had a major rally from $9 to $12, and I kept a close eye on APE since then and waited for a decent pullback and still waiting. Another reason that holds me to own the stock for so long is trading volume. I realised despite performing so well and paying a decent dividend, the share is under-talked among brokers and investors. It's been almost a year, but the stock hasn't shown any sign of weakness. I feel I missed a golden opportunity with this stock. How would you determine an entry price on the constantly rising stock like this? It just had a minor pullback recently from 17.30 to 15.30. Would you enter the stock right now?
Well, no is the answer, simply because of how it's pulled back just in the last week. We can see there that it actually, if we enlarge this right up, I'll just bring this on over, we can see here that it's actually tried to go through that high, and the move has actually failed and it's closed low. So it's closed right down on its bar and it's trying to get back through there. If it went through the high, then there's a reasonable argument to say that it could go a lot further and therefore there could be a buy opportunity in it. But right now...
why would you think the broking industry has been quiet on this one, or the industry has been quiet on it?
Well, some stocks get reported on and others don't. It's just the way it is. And why does that happen? Well, it could be just that those individual companies are promoting themselves to the brokers and you know, they've got an opportunity. I mean, some brokers could have a relationship with those companies too. You don't know.
Well, you never know. Yeah. Maybe they're keeping quiet so they can buy more of it themselves. I don't
Is that
know.
what you're thinking?
All right. Conspiracy thinking,
yeah,
but that's
a good way
okay.
of
But
thinking.
thank you for your call.
Okay. Well, we've got another caller on the line. It looks like we've got Guy on the line. Hi, Guy. Welcome to the show. I'm just looking forward to chatting with you, and you've got a great stock there that you're wanting to talk about. Would you tell us where you're from?
Yeah, hi. G'day, I'm from Hunter Valley, New South Wales.
Oh, beautiful place. How would you like to be in the Hunter Valley right now?
Absolutely. We got friends in Pecolbin. So
Yeah,
say hello
not
to them
far
for
from
us.
me. Yeah, good place for lockdown.
Absolutely. Wish I was there right now.
Okay. Well, look, would you please tell us about your question?
Yeah, okay, just asking you about West Farmers. I bought them a few months ago for $50.74 and probably missed the peak of the top of the graph there looking at the trend line, and I think maybe I should have sold, but I haven't really done a lot of shorter sales before anyway, so just interested to hear your thoughts on West Farmers. I'm thinking of holding on to it.
Okay.
I'd like to hear your thoughts.
All right. Look, fantastic. And you're right, it has actually pulled back quite a way, and there is a reason to sell. However, whether you choose to sell or not depends on the rules that you set when you actually place your trade. So the challenge for it, I guess, is because it's below the angle of that trend, when it comes up towards that line, it may not go back through it. And that's the real risk with stocks that are trading below their trend lines. A lot of people try to buy when they're fallen below the trend line, not realising that is what can happen. So I think it's a really great question that you've asked, definitely, and all the best with that decision, but it's got to be yours is the point here that we're making. So whatever you do, make sure you've set a stop loss for your trade, you know, if you do stay in there.
I mean, he's still in profit. He bought at 50.74, somewhere around where my pointer is. So he's still in profit of around about 15%. What you don't want to see is that eroded anymore.
Definitely.
And that's really what you don't want to see. So, and people quite often don't want to sell the stock because they go, oh, wow, well, what happens if it does X or Y, if it goes up after I sell it? Well, that can happen to you at some stage. But right now, you know, if you decided to exit and it starts to go up in a couple of weeks' time, you can buy it back again. Because it's about whether we always put lines in the sand about protecting our capital, but also protecting our profit. That's why we have rules around it. But if your goal is you want to hold it for the next 3 to 5 or 10 years, then what's happened the last couple of weeks?
His view may be different.
It's what's happening right now is irrelevant. It's really irrelevant if you're going to hold it for that sort of 5 and 10 years, because West Farm is a phenomenal stock, and in 10 years' time it'll be well above where the price is right now. So again, you just need to determine what the goal of your portfolio is and what your strategy is. But I think it's a great stock, but right now a little bit weak.
All right. The next question that we have is from Jazz. Hi, Dale and Janine. Can you please have a look at Appen APX and give your analysis where it is heading in the short to medium term? This stock has downward run and at the moment it is creeping around $10 at support level. I bought this recent at $10.50 and planning to hold for 6 to 12 months while fundamentals does not look good. doesn't look that bad. Many thanks, Jazz. All right. Okay, we've got the stock up there on the screen for you. Thanks so much for that question, Jazz. You can see there on the left-hand side, it's all a sea of red.
It is a sea of red.
Pushing down and trying to find that bottom is really what the stock's doing. You can see on that monthly chart there, and I'll just open that up a bit. You can see how, it's closed each month down low on the bar. That's not a great sign for the stock to recover just yet. And also, what's worse for this share right now is it's just taken out this low. So despite the fact that we've actually got a support level which Jazz has identified across here, which whether that's the strongest level or not, that's to be debated. Because if you have technical analysis and you're using your analysis to find proper price levels, then that may not, just because there's a natural level there doesn't mean it's the strongest level.
No.
So, that's the other thing. But I would say, given what it's done a couple of weeks ago, I just wouldn't even be, I'd be steering clear of it, definitely for now.
I've seen so many emails and people posting on our YouTube channel and comments and everything else, and people just wanting to buy stuff because they're cheap, and they're really catching falling knives. And it really shows what we see in some of the emails that I'm getting just coming through from just general viewers of our stuff is a lot of people don't understand this sort of stuff, and they really haven't understood what we talked about in our main topic tonight too, which is really, really critical as well.
Guess what?
What?
Is that all you wanted to say?
Yeah, it is.
Because we have another caller. We've got Brendan on the line. Thank you for calling, Brendan. What is your stock? Hi, Brendan, I should say, first of all. And
Hi.
You say hello first. That's what you say,
that's
hello.
Rude, isn't it? How are you today, and what's the stock that you're wanting to share with us today?
My stock is GNC, GrainCorp.
Yes?
I bought in it in July, and it confirmed the uptrend for me after that. But now it's broken out. I'm not sure if it's is $6.14 a good resistance point, or what sort of happens. I can't really get a trend line on it.
Okay. Wow, look at it. Okay, thanks, Brendan. Really interesting stock choice he's got there. Gosh, look how volatile it can be at times.
So this is the high of July. I've just put, because he didn't actually say his price, so he bought somewhere in July through here and it's broken up. So we're in profit. So keep going.
Yeah, nice one. You'd be continuing to maintain that. But this is always the challenge, isn't it? So when a stock blows off like that and it accelerates away so quickly, people are looking at the book and saying, well, I can't get a trend line up underneath that. How do I manage it? That's why we have different rules, not just trend lines. But you need to, I would be setting a reasonably tight stop underneath that rise.
Yeah, but he's saying, he mentioned 614 as possible resistance, but it's up over 640. So I think he might have meant
maybe
640. He may have meant 640, but having a look at this, if you look at the whole history of this stock, look at that.
Yeah.
So it's quite volatile, and it just really not really a stock that will run on things like trend lines, because it's just not that kind of stock to do that. So wanting to put a trend line on this might be really difficult.
That's a really good point.
In terms of this sort of stock. So you need to have some other rules to be able to manage your stock. But again, at worst, you'd probably put your stop loss underneath that, which is that low of $6.02.
Yeah, because look how quick when it does reverse, just take this bar, for example, here on 19th of February, it nearly reversed the whole range of that big rise the week before. So that's a real risk with it, isn't it, with this sort of volatility. But if we go back, what's exciting about it is it's actually traded through its all-time high. See that? It's way above it now. So to me, that's fantastic. I just think that it could come back and try to settle out. I agree with you in terms of, protecting that profit that he's got.
What's exciting, to me, it's people worry about things like where they're, they can't get a trend line. But if it's going up, stay with it. If it starts to go down, make sure you put a line in the sand to get out wherever you want. And that's really that. But thank you for the call. We do have another email, and this one is from Stuart. And Stuart says, Dear Dale and Janine, love the show. I'm looking at purchasing PRL to hold for the long term. What are your thoughts on the chart at present? Regards, Stuart. You're bringing that up, but most people get confused what short, medium and long term is.
Yeah, they do.
They think anything over 12 months is long term.
I'm going to tell you, this stock's dead. Can we just show the chart?
It's CRAP.
I have to get my doctor's kit out and just perform an operation on it. Can you see that chart there, everybody? It's flatlined, but this could be a backdoor listing, couldn't
if
it?
this was your ECG, you'd be in trouble, wouldn't you?
Yeah, okay, so we do have life. All of a sudden, the stock's gone up, and you can see it's just trading sideways. So, look, this is the monthly chart. I've taken the longer-term picture just out of interest. We could have another rise yet to come on this share as potential. I'm actually looking at it thinking, okay, if it takes out, it's really a liquid, so you're going to get in some strife trying to get out of it if you've got a big position in it, that's for sure. So 0.183, if it takes out that high there is a real possibility it could challenge that high. But jeepers, you know.
I think you'd be mad to try and trade this stock, wouldn't you?
If it takes out that low of last week, which I think's 14.3 cents, this thing's going south.
I don't know. I understand why people get excited about stocks that do what this one do, but
There's plenty of stocks. There's plenty of
trade
others.
something so much easier to trade. So I'm not having a go at anybody.
Is it about getting dollar signs in the eyes?
Yeah, it is. A lot of people, and I'm not saying he's got that, but I'm just saying, or the person's got that. But it's really you can't buy yesterday's returns.
Is it like doing a bungee jump without putting the strap on your ankle?
Probably, yeah. And to me, I'd rather trade a stock that's super consistent than the one that goes up 100% in 6 weeks. And that's really what I'd rather trade. So, but anyway, that's our thoughts on a PRL. So I think it's your turn now.
All right. If you called into the show and you missed out this week, then we missed out too, because we would have enjoyed the chance to have a chat with you. And just make sure that you write your question down and remember it. We'll be back here watching the show next week, as you'll get another chance to call in when we give you the cue.
Okay, now remember, the best way to have your questions answered is to call in between 7 to 8 p.m. every single Tuesday. Otherwise, email your question right now to info@wealthwithin.com.au. Remember to include Wealth Within Live in the subject line, because we do have emails. Also remember in order to show your appreciation for the show and helping you by answering your questions and educating you, all we ask is that you subscribe to our channel first and then send your email in.
Now, I feel like we've only been on the show tonight for 5 minutes. I seriously do.
It is.
My throat's not even hoarse, and neither is yours. So can we go again? We could do another hour, couldn't we?
Yes. They're all going, yes.
They're all in the background. They're telling me no, Janine. Well, that's it for tonight's show. We hope you not only enjoyed what we presented, but also received great value from our answers to your questions.
Now, remember to put this show into your calendar and join us right here live on the Australian Stock Market Show each Tuesday at 7 to 8 p.m.
As always, thank you for joining us, and we hope that you have a great week. We look forward to you joining us again next week. For now, goodbye, good luck, and good trading.